Imagine getting paid every week without ever clocking into a job. How would that change your life? What if I told you that with the right strategy, you could set up an investment portfolio that delivers cash straight to your account every single week? In this video, I'm going to show you exactly how to build a portfolio of dividend stocks that pays you like clockwork every week. No more waiting around for quarterly payouts. This is about turning your investments into a steady, predictable income stream. Whether you're looking to supplement your current income, cover monthly expenses, or simply enjoy the peace of mind that comes with regular cash flow, this strategy can work for you. Imagine earning a steady $250 every single week without lifting a finger. What if I told you that with a carefully selected portfolio, this could be your reality? In this video, I'm going to walk you through how you can build a dividend portfolio that pays you every week like clockwork. By the end, I'll show you exactly how much you need to invest to hit that magic $250 weekly mark. Stick around. You won't want to miss this. If you want more tips on building wealth, hit the subscribe button. Your support helps us create more valuable content. Understanding weekly cash flow with dividend stocks. Have you ever wondered how some investors seem to have a paycheck coming in every week, even though they don't have a traditional job? The secret lies in how they structure their dividend stock portfolio. To achieve weekly cash flow, it's crucial to understand how dividend payouts work. Most companies pay dividends quarterly, but by carefully selecting a mix of stocks with different payout schedules, you can create a steady stream of income that arrives every single week. Let's break it down. Each stock in your portfolio will pay dividends at different times throughout the year. By choosing stocks from different sectors and industries with staggered payment dates, you can cover every week of the month. This way, you're not waiting months between payments, you're getting paid consistently. For example, if one company pays dividends in the first week of January, another might pay in the second week, and so on. With careful planning, you can arrange it so that a different stock pays out every week, creating a reliable flow of income. Why it matters. This approach isn't just about receiving regular payments, it's about financial stability and peace of mind. By setting up your portfolio this way, you're essentially giving yourself a paycheck every week, which can be particularly valuable if you're relying on these dividends for your living expenses, or if you just want the security of knowing you have regular cash flow. Benefits of weekly cash flow. Imagine having the comfort of knowing that every week, without fail, you have money flowing into your account, just like a regular paycheck, but without the need to work for it. That's the power of setting up a dividend portfolio for weekly cash flow. It's not just about having money in the bank, it's about the financial stability that comes with knowing you can cover your expenses consistently. Whether it's paying bills, managing day-to-day living costs, or setting aside funds for savings, the assurance that you have a steady stream of income is invaluable. But it doesn't stop there. Weekly cash flow from dividends also offers a level of financial flexibility that few other investment strategies can match. Instead of waiting for quarterly or annual payouts, you have the freedom to reinvest your earnings more frequently, take advantage of market opportunities as they arise, or simply enjoy the fruits of your investments, knowing there's more income coming in just a few days. The compounding effect of reinvesting those dividends sooner can significantly accelerate your wealth-building efforts, giving you a financial edge that grows over time. Beyond the financial benefits, there's also the peace of mind that comes with regular income. For those who are retired, semi-retired, or even just looking to supplement their income, the predictability of weekly dividends can greatly reduce financial stress. It's comforting to know that your investments are working for you, providing a consistent income stream that allows you to focus on what really matters in life. Additionally, as inflation erodes the value of money over time, the growth potential of dividend-paying stocks offers a hedge, helping to maintain your purchasing power. Many companies not only pay regular dividends but also increase them over time, ensuring that your income grows, keeping pace with inflation. These advantages, stability, flexibility, compounding growth, peace of mind, and inflation protection, make the strategy of weekly cash flow from dividend stocks a compelling choice for anyone looking to secure their financial future. It's a proactive approach that goes beyond traditional investment strategies, offering both immediate and long-term rewards. Criteria for selecting dividend stocks. When building a portfolio for consistent weekly cash flow through dividend stocks, it's essential to focus on stocks that strike a balance between yield and sustainability. The dividend yield, which shows the percentage of a company's share price paid out as dividends annually, is a critical factor. However, chasing extremely high yields can be risky, as they might signal underlying issues within the company. Instead, targeting companies with moderate, stable yields in the 2% to 5% range offers a safer bet, ensuring a steady income without exposing you to excessive risk. Equally important is the dividend payout ratio, which indicates how much of a company's earnings are distributed as dividends. A lower payout ratio, ideally below 60%, suggests that the company retains enough earnings to reinvest in its growth, making it more likely to sustain or even increase dividends over time. Companies with a disciplined payout ratio are often better positioned to weather economic downturns while continuing to reward shareholders. This approach not only ensures stability, but also aligns with long-term growth strategies. Beyond the numbers, a company's dividend history and overall financial health are vital. Companies with a long track record of paying and increasing dividends, such as dividend aristocrats, are generally more reliable. These firms have demonstrated resilience through economic cycles, making them dependable sources of income. Additionally, diversifying your portfolio across sectors like utilities, healthcare, and technology helps spread risk. This diversification ensures that your cash flow isn't overly dependent on a single industry's performance, providing a robust and secure income stream designed to deliver steady weekly cash flow. Creating a portfolio for consistent weekly cash flow requires carefully selected dividend stocks with staggered payout schedules. Here's a list of 12 stocks, organized to ensure a dividend check every week. The first week starts with VanEck BDC Income ETF, BIZD, which focuses on business development companies that provide financing to small and mid-sized businesses. BIZD offers an impressive dividend yield of 11.33%, making it a strong choice for regular income. Its diverse holdings within the BDC sector add a layer of risk management. Following BIZD, DHT Holdings, DHT, an oil tanker industry player, comes in with a robust dividend yield of 10.31%. DHT is known for its stable earnings and strong history of paying high dividends, with payouts in the first week of February, May, August, and November, ensuring a reliable income stream. Moving into the second week, CTO Realty Growth, CTO, offers a high dividend yield of 7.57%, supported by rental income and property appreciation. CTO specializes in commercial real estate, providing a diversified portfolio of income-producing properties, with payouts scheduled for the first week of March, June, September, and December. Accompanying CTO is OneMain Holdings, OMF, a financial services company that offers personal loans and insurance products. OMF's high dividend yield of 9.27% is backed by strong earnings and financial management, with dividends paid in the second week of February, May, August, and November. In the third week, we have Ares Capital, ARCC, a prominent BDC that provides financing solutions to middle-market companies. ARCC's high dividend yield of 9.46% and diversified portfolio make it a robust choice for regular income. The company's payouts occur in the second week of March, June, September, and December. Bank of Montreal, BMO, a major financial institution, offers a dividend yield of 5.54% and contributes to this week's cash flow. BMO's consistent payments are scheduled for the second week of January, April, July, and October. For the fourth week, Pfizer, PFE, a leading pharmaceutical company, comes in with a dividend yield of 5.52%. Known for its strong market position and reliable income source, Pfizer pays dividends in the third week of January, April, July, and October. Hercules Capital, HTGC, a BDC that provides venture debt to growth stage companies, follows with a high yield of 10.21%. HTGC pays dividends in the third week of February, May, August, and November, fitting perfectly into the portfolio. The fifth week features Altria Group, MO, a leading tobacco company with a dividend yield of 7.68%. Altria's stable cash flows and strong market position make it a reliable choice, with dividends paid in the third week of March, June, September, and December. Alongside Altria is Cogent Communications Holdings, CCOI, a telecommunications company offering high-speed internet services. CCOI's high yield of 5.83% is backed by consistent revenue growth, with payouts occurring in the fourth week of February, May, August, and November. Finally, rounding out the portfolio is New Lake Capital Partners, NLCP, a REIT focused on cannabis-related properties. NLCP offers a high dividend yield of 8.89%, with dividends paid in the fourth week of March, June, September, and December. Completing the list is Health Peak Properties, PEAK, a healthcare-focused REIT with a dividend yield of 5.57%. PEAK pays dividends in the fourth week of January, April, July, and October, ensuring continued end-of-month payouts. This well-structured portfolio, with its diverse holdings and strategic payout schedule, is designed to provide steady cash flow throughout the year. This portfolio is meticulously crafted to provide you with a steady weekly income, thanks to the strategic selection of dividend stocks that pay out in different weeks of each month. By choosing stocks with staggered payout dates, you can ensure that you receive dividends every week, creating a consistent cash flow stream. For example, let's say you've invested a total amount spread evenly across all 12 stocks in this portfolio. In the first week, you receive dividends from VanEck BDC Income ETF, BIZD, and DHT Holdings, DHT. The next week, payments come in from CTO Realty Growth, CTO, and One Main Holdings, OMF. This pattern continues with payouts coming from Ares Capital, ARCC, and Bank of Montreal, BMO, in the third week, followed by dividends from Pfizer, PFE, and Hercules Capital, HTGC, in the fourth week. By the time you reach the fifth week, dividends from Altria Group, MO, and Cogent Communications Holdings, CCOI, have arrived, and the sixth week brings in payouts from New Lake Capital Partners, NLCP, and Health Peak Properties, PEAK. To achieve a consistent weekly income of around $250 from dividends, you would need to strategically allocate your investments across the 12 carefully selected dividend stocks. Let's break down how this can be done. For instance, investing approximately $45,000 in VanEck BDC Income ETF, BIZD, with its 11.33% dividend yield would generate around $5,098 annually, translating to about $98 per week. Similarly, a $40,000 investment in DHT Holdings, DHT, at a 10.31% yield would provide $4,024 annually, or around $79 per week. By placing $35,000 into CTO Realty Growth, CTO, offering a 7.57% yield, you could earn $2,650 annually, or about $51 weekly. Moreover, investing $35,000 in One Main Holdings, OMF, with a 9.27% yield could yield $3,244 annually, equating to $62 per week, while $30,000 in Ares Capital, ARCC, at a 9.46% yield would result in $2,138 annually, or approximately $55 per week. For added stability, a $40,000 investment in Bank of Montreal, BMO, with a 5.54% yield could generate $2,216 annually, or around $43 weekly, while $35,000 in Pfizer, PFE, with a 5.52% yield would produce $1,930 annually, translating to about $37 weekly. Continuing, a $25,000 investment in Hercules Capital, HTGC, with a 10.21% yield could yield $2,553 annually, or $49 per week, and $30,000 in Altria Group, MO, at a 7.68% yield would generate $2,304 annually, or $44 per week. By investing $35,000 in Cogent Communications Holdings, CCOI, with a 5.83% yield, you would earn $2,040 annually, translating to $39 per week. Additionally, $30,000 in New Lake Capital Partners, NLCP, with an 8.89% yield could yield $2,667 annually, or $51 per week, and a $40,000 investment in Health Peak Properties, PEAK, at a 5.57% yield would generate $2,128 annually, or about $43 per week. In total, this strategy would require approximately $420,000 spread across the 12 stocks. This diversified portfolio would yield around $52,194 annually, providing a consistent weekly income of approximately $1,017. When divided by 4 weeks in a month, this results in roughly $254 per week, offering financial stability and a reliable income stream through careful investment in dividend stocks. Before you go, if you're excited about the idea of building a portfolio that pays you every week, make sure to hit that like button and subscribe for more strategies on growing your wealth. Don't forget to ring the notification bell so you never miss a future video.